Good evening to all of you. Welcome you to today's webinar. Today we are going to look at first the views of Nifty, Bank Nifty and some stocks, and also we are going to look at how to use options to minimize investment, increase the return and also play it safe. So most important thing is we have to increase the return on investment. Increase return on investment. Second thing is less capital. Right? Less capital. Third is safety. So these are the very important points which define your total success, because it's not the question of identifying where to buy, where to sell. That's one aspect. But more than that, I think how you minimize your capital, how you can increase your return on investment. That's very important, because today even for 25,000 rupees, a trader can trade in something like Nifty. That is, Nifty you need an investment which is more than 1 lakh, Nifty futures. But even for 20,000 rupees or 25,000 rupees, you can create a portfolio of a Nifty, and the risk reward appetite will be very similar to a Nifty futures movement. So we are going to see in the next 40 minutes how we are going to select some strikes and give you that particular sort of return. So we are going to discuss 1 or 2 strategies here. But first, before that, we'll just look at where Nifty, Bank Nifty is, and probably look at where the next levels are it is heading towards. Now, I think we did not say that the Nifty trend is up. I think everybody knows that the Nifty trend is up. So is the Bank Nifty. Now, whether that particular when the change will come, I think if you want to identify which is the place for stop loss, that we can do. Now, first of all, we are going to look at the chart. Okay, now see, as far as Nifty is concerned, unlike stocks, in the case of Nifty, in a bull run, it is very difficult to get in and get out very profitably. That is, by the time you put your stop loss, look at the market going down, then only to see the market coming up. So it's very, very difficult to make gains by doing trading. What I'm saying is, suppose there are 2 sets of investor. Let us say one set, let us say A, another is B. Now, let us say somebody started, let us say in the last leg, which started something like 14,200. From there, let us say somebody had invested. Okay, and there is another person B who also started at 14,200. Now he is also based on chart. He is also based on chart, but only thing is, he behaves more like an investor. He behaves like more like a trader. Now, whom do you think would have made money? Now, that also depends on what sort of a trader he is. Now, let us say if he is looking at putting stop losses for 100 points, something in the chart, he wants to go with smaller stop losses. Say, let us say smaller stop losses. Then in that particular case, you will have the advantage. Sometimes it will look as if good that I came out of it quite early. But by the time you pat yourself in the back, you can see the market just dipping and then coming up very swiftly. Now, in the last couple of months, we see that if there is a fall, even before you just go out of your room and come back, within 10-15 minutes, you can see the market swiftly rallying. Now, even day before yesterday, when it fell down to 16,160, next to 1 hour it was back to 16,280. So it is very difficult for you. Suppose if you had put a stop loss, before that the stop loss was 16,210. So if you had put a stop loss at 16,210, now where do you think the entry will be again? The entry will be definitely much, much higher than 16,210, and you will always feel shaky to take a position, long position again at 16,350, 16,370, which is their previous high. So you will always think that there is a possibility of some breakup happening above that and then fall. So you will not do that. But then you see the market rallying, and it continues to rally, and it frustrates you. So the best thing is, at sometimes it is better to discard smaller stop losses. So that is one approach. I'm only giving you the possible approaches, so each one can decide about what sort of trader and what sort of personality he or she is, and then decide about a particular trade. So here is a question that instead of putting frequent stop losses, you can just get on board at some stage and then just ride the market. Now, in this particular case, let us say we did that entered at some level at say 14,500, 14,600, wherever it is, and then you could have continued to ride on it with a very less investment, and you would have got a return, much higher return on investment. The profit which is in the same of futures you would have got in an option investment also. But only thing is that probably you would have had a higher return on investment. Okay, that is the most important thing. And second feature is, one is that after identifying the trend, now this trend probably, let us say on a daily chart, the easiest way normally one identifies the trend is it should be above the 20-day moving average and above the 50-day moving average, because normally 15-day moving average generally is considered to be a sacrosanct line which gives a change in the medium trend of the market. That is one look. So as long as the market trades above 50-day moving average, let us say you tend to be more on the generally on the upside without disturbing your position. So that's the general call you can take. So the easiest call that you can take is above 50-day moving average. Okay, you are generally on the long side. Okay, or even about 20-day moving average. Okay, so if the market is about 20 plus 50, you are just on the upside. You're just on the upside. Okay. Now, this applies both for Nifty and Bank Nifty. So first of all, we will see this, and then we will look at what we should have done in the course of few months and what we should continue to do. Firstly, there is, you will say that it is already at the top, so let me wait for some correction before I go on board. That is okay, because it is true that after all, it has already rallied from the last low was 15,500, and it has already rallied by 1,000 points. 1,000, 1,100, 1,200 points, there is a chance that probably you can have some sort of a dip. Okay, so let's look at the chart first, and then look at the how we should minimize our investment and get the same return. Now, investing.com is the site that we use. And let's look at we'll put the 50-day moving average and 20-day moving average right now. So this, you can go here, type moving average. So now we will go with 20 and this will be 50. Okay. Okay, so now this is the 20 and 50-day moving average. Now you can see in the last corrections also, this has generally taken a good amount of support close to the 50-day moving average. That is, the close has been above 50-day moving average. Now what does it indicate? Right now there is always a chance of a fall now coming up to 16,000, because the moving average is still trending a little bit on the higher side. So we could see something around 16,000 levels, 16,000 to 15,865, 870 levels. So this is still on the uptrend. So probably this will catch up to and go towards 15,940, 950, which has been this particular high. There is always a chance that there could be some dip towards 15,950, 960 levels. But if you see the last correction, the correction was only 400 points, 15,950 to 15,550, approximately 400, 450 points. So this time already it has gone to 16,529. So the chances that we may get much below 16,129, 16,100 itself looks to be quite remote. So that means probably we are heading, probably with some correction, I think we should be looking at 16,160 as the most realistic chance right now. 16,160 as the most realistic chance, with the first support coming closer to 16,350. Now, let us say 16,350, it starts falling. And no, you will say that, okay, let me put the break even, let me put the stop loss. That's a normal stop loss right now. 16,340, 350 is a normal stop loss. But let us say you put a 16,340, 350, it will come to 16,150, 160 levels. And then before you again try to look at the market, I mean like what's going to whether it's going to fall much lower and whether you're going to get at lower level, immediately you can see a bounce back coming above 16,350. So you will again end up either getting at board either at 16,350 or even higher if there is a swift rally. So the best thing that you should do in a bull market is if you put in a stop loss of 16,350 and it falls to 16,160, then on correction itself you should buy straight away, not waiting for the trend again to start. So in a case of a bull market, I think it is better to wait for some correction, and in that correction itself you pick it up rather than waiting for the momentum or the trend to pick up substantially. So sometimes yes, there is a chance that during certain circumstances the fall can be much deeper. But always you have both sides of the coin. You cannot pick up only one, because when you win sometimes, one or two times you may have to lose, for which the options now will play a safe role. So now let us look at the market right now at this place, and let us look at where probably it could be heading. Maybe 16,700 or so, because let's look at the Fibonacci ratio. For the Fibonacci retracement, so sorry. It's not working. Okay. So now we'll put this retracement. So the first one is where it is right now. That is 16,552. So 16,552 should be the first area of resistance in the market, but much above that we'll get more than 16,700 or so. So I think it looks as if the 16,552 which came today, I think even if that is broken, then we are seeing much higher level towards 16,700 or so. And normally otherwise you can just keep, this was the low which came at 15,513, and normally you can multiply this by around 9% into 1.09. that will be the first level, which is 16,909, or you have 15,515 into 5.5 times, which is these are all trend factors, that is 16,375, and that has been broken. So I think with 16,375 being broken, I think it has a chance more towards now going towards 16,900. 16,900 is a complete possibility right now, because if you see the earlier also the trend when it came from this level, see this was 15,150, and this was 14,800 points. 1,800 points of rally was there. And same 1,800 points, if you put was 61.8% retracement extension, it comes to 1,112 points, which is now coming closer to 16,600, somewhere around the same place right now where we are. And if it is going to exceed that, then I think we are looking at 1,377 plus 15,512. So it is heading towards 16,900. So right now, wherever we are, if it is crossed, then we are looking something like 16,900. I think from there only it looks as if a possible pullback can come. So right now we should be heading more towards the 16,900 levels. 16,900 levels. So what we should do, I think already it is looking good. So should we play straight away for the 16,900 thing? So in that case, what we should do now? Let us look at the option chain. Now, whatever we are saying, it's not necessarily it should happen next week itself. It can happen over a period of a few weeks also. So right now, let us say when we go for the option, we will always look at if it is to behave like a futures. If it is going to behave like a futures, this option investment, if it is going to behave like a futures, we will take deep in the money option. So we already know, you may be already knowing about deep in the money option. You have been already introduced to this. This is deep in the money option, behaves like a futures. That is what we are doing. Suppose if the Nifty is 16,550 then probably anything which is say 16,300, 16,200 on a weekly time frame becomes a deep in the money option. Now we are looking at weekly option rather than monthly option because no, the first is that we are trying to minimize the investment. So even when compared to paying more premium in a monthly option, we plan to do it in a weekly option. So let us look at 16,300, 16,200. Now what is the most important point that we have to be careful about it is, see, normally let us look at while choosing the strikes, what should strike our mind? This is a very fine point which you must understand. Now it is a time value. The time value, if you are to have something like a futures or in the spot, we should not spend much on the time value. So time value has to be kept minimal. So that means that's the reason why we go for deep in the money option. Now how much of time value we can afford for the lower investment that you want to make? So let us look at the overall nature of Nifty's rally. Now generally speaking, Nifty normally has a yearly return, average return of say 12% per annum, average return. Some years it can be more, some years it can be less. So let's look at the average return, which is approximately 12% per annum. Now when you talk about 12% per annum, it means almost 1% per month, 1% per month, which means approximately 160 points. Right now going by this, it's something like 160 points per month, right? Per month. 160 points per month is a normal possibility. So if we want to capture this, this place, then in that case we already futures is priced. Futures is pricing something like a 4% per annum is the interest cost, right? 4% per annum approximately is interest cost. The futures to futures rollover does. So if 12% per annum is the spot price average gain, then we are getting something like 8% per annum on the future side. So this is the gain. This is the average gain. So 8% per annum comes approximately to 0.6%, 0.65, 0.7%, which means something like what we're getting is approximately 160 into 0.7. It comes to 115 points, let us say. It is 115 points per month in the future side. So what we should do is that at any point of time, at a maximum, in order to reduce, because we are reducing our investment, our time value that we can afford, for this should be not more than 15 points per week. 15 points per week, because if we are going to get 15 into 460, then we still get 55 points. Okay, we still get 55 points return, and that 55 points of return is still sufficient because we are going to have an investment which is about 1/5 or 1/6 of the futures investment. So because of that, the return will still look good. I will explain to you how it is. So we should look at something like only a 15 points per week should be our investment, or even much lower. So what we should do this, then we should have buy a deep in the money call option where the time value that we are going to spend should not be more than 15 points per week. 15 points per week. So let us look at whether we are getting that thing. Now, see, right now, for at the 16,550 levels that where we are, the 16,550 or you can just look at the put is 97, and 64 rupees is the call option, right? So 16,500 is the approximate price right now, because 90 rupees, this is 74, so the average here. So this is a very high time value. We should not go for at the money option, because at the money option, if we go for it, we are plainly paying a huge amount of time value, which is not going to be beneficial, and the return on investment is going to be quite poor. So what we should do is that we should look at, say, at the maximum, I told you 15 points, so 16,150 or 16,200. So if we are going to only look at this one, so 16,200 to 16,150 is maximum, or I will straight away go up to 16,000. So let us say we want what is something which is something very similar to the futures, right? Very similar to the futures. So what I will do is that I will go for a 16,000 option itself, which is 525 rupees, and the time value that I am seeing is just look at the put value, which is around 10 rupees. So maximum I am losing 10 rupees on the time value, which is fine. So what I will do is that I will take 16,000 call option now. Okay, in the money option, deep in the money option, I will even take 16,000 because I want a return which is similar to the futures, nothing much. Okay, so 16,000 I am paying 525, right? So for 525, what is the investment I require into 50? 525 into 50, so that comes to 26,250. Now, in the normal case of futures, it is 1.1 lakhs per 1.1 lakhs. So this is only 25% of that, right? So it's only 20. This is divided by 1,10,000. This is 25, approximately 25%. So I'm getting even if I'm spending 10 rupees on a week, okay, 10 rupees on a week, okay, and it goes to 40 rupees per month. Out of 110 rupees, there I'm getting 110, 112. I'm getting only say 70 rupees, which is 70% of that value. But here it is only one fourth of this investment, which means that the return on investment is going to be very, very substantial for me when compared to the future. So now let me explain to you how it is. So after 1 month, let us say now from if you are buying a Nifty futures, then probably let us say 16,550 you are buying now. See at the end of this particular week, let us say it is 16,650. Now you have made 100 rupees here. I've also made there. No, I paid 525 rupees. So 16,000 plus 525 is what I have paid. 16,525. And the futures, I think I'm not going to pay that much. I think the spot is not that much. I think the spot is 16,515. So I think the investment will come to 16,515. So 16,515, 16,650, I would have made a profit of 135 rupees here. Okay. So here I would have made a profit of 125 rupees. 10 rupees is gone. But look at my investment. There's only 10 rupees difference. But look at my investment. There I'm paying 1.1 lakhs. So if I do 135, so 135 into 50 divided by 1,10,000, right? This is the return on investment for this. In this case, it is 125 into 50 divided by 26,000 rupees. So what is the return on investment here? Look at this. This is 6,750. Okay. This is 6,125 into 50. This is 6,250. So what is the return on investment? This is substantially higher, right? As a percentage, if you look at it, 6,250 divided by 26,000. This gives me 24%. Okay, for whatever period it is. This is 6,750 divided by 1,10,000. This is 6%. Look at this. So I'm getting a return which is whether loss or profit is going to be the same, right? So this is the advantage of I told you 25, 26 approximately, right? So this is the way you look at the option as a medium of investment compared to the futures. Because if you lose in the futures, you will also lose that much of premium here. Okay, but when you get a return, the return on investment is going to be high. Now, what is the problem? The problem right now is that we are talking about exposure margin. Now, from September onwards, you are going to have 100%. There's nothing like a positional trading or intraday trading because exposure is going to go off, except for the market jump, which you probably would like to avoid. So you may have an intraday closure or something. Otherwise, for investment purposes, both are going to be the same. Now, if that be the case, then you are not going to be put to any disadvantage. Now also you will be doing, say, let us say they are giving, the member is giving 7 times, 6 times exposure. The same thing has come through almost here. You are getting almost 4 to 5 times exposure here. right? Like what it is. So absolutely there is no disadvantage. So you should consider something like a deep in the money option. Now the alternate thing for this is that, let us say you can go for a this one, that is spread option here. Spread option. So now we talked about 16,900 as the very important level, but whether that's going to happen within this week or no is not known right now. So let us say you are taking an option, you don't want to spend even that 10 rupees which we saw, you don't want to spend. So let us look at what we can do in this case. Whether we talked about 16,000, we have a 10 rupees sign, and see 16,800 call option is 5 rupees or so. So there is not much that probably, the call option on the upside has got no value. There is no point in doing a spread on the upside, because even 16,750 is at around 9 rupees. So for 9 rupees you have to spend, you have to give some amount of spread margin. So there is absolutely, it doesn't make any case, because it is better that in this particular case you straight away go for a 16,000, because the market is so good. It is better that you go for a 16,000 option, or otherwise what you have to do is that you have to look at something like the 16,300, 350 being the most important levels of support. You should just go for a 16,300 call, but there you are going to pay 27 rupees. So you are going to pay 27 rupees time value. So 27 rupees time value they are not interested in giving, because 27 rupees time value if you give, it will be quite quite expensive for the entire month, because it will almost take off all your futures profit if market is going to gain only at the rate of 12% per annum. Okay, so every week you can't afford 27 rupees. So the only thing that we can do is to slightly do a little more number of contracts, some more contracts you need to do to get the result. So I would suggest that you can look at, but if you go for 16,300 call, you will be able to do at 244 rupees. You will be able to do at 244 rupees. So 244 rupees, then it comes only at 10,000 rupees approximately. So if you feel that okay, 27 rupees is it doesn't matter, and in this case it's a quite a amount of bull run. So even another 100 points if you want, if it goes up, and we are able to do some additional contract, so 1.2 times of the normal contract that we do, then in that case we are going to get that return. So how you visualize the situation is like this. See, I'm let us say now I buy a 16,300 call for 240 rupees or whatever it is, and I'm paying 27 rupees time value, right? So if the market goes up by another 100 points, so I will have some 27 rupees less. Okay, so that means 50 into 100 points going up means I will get another 73 points only here, right? Because 27 rupees I am paying as a time value. If it goes up by another 100 points, I will get only 50 into 73. So that means it comes to 73 into 50. It is 365 rupees. 365 or 3,650. Okay. So for this, if for an 100 point move, this is equivalent to having 36 shares, right? So for it is having like for 36 share, and for 36 shares we are having an investment which is 10,000 rupees. So still it's a worthwhile game. Still it is worthwhile game for us to think about such an investment, because if it goes up in any manner which is more than this point of time value that we are paying, then it is okay. In that particular case it is okay, because we should not have a value which is less than 27 points of gain per week, because in that particular case then we are if the futures, if there is only a 10-point gain, at least in futures we will get the 10-point gain. But whereas in this case, if it is only 27 points already time value, we will lose 17 rupees. We will lose 17 rupees. So it is very important that we get above the time value that you pay. That is the reason why we are suggesting going in for slightly deep in the money option always. Okay. So if you do a spread, probably this, if in a big rally, okay, in a big rally like this, then the upside becomes a problem. So the easiest thing is to go is just do a deep in the money option and pay less than 10 rupees as a time value, less than 10 rupees as a time value. So in this case it comes there, and you will pay 25,000 rupees only, and you will get a good amount of gain. Okay, so this is one strategy that you can adopt. Okay, then we look at the same thing for Bank Nifty. Now let's look at where Bank Nifty is, and then take a call now. The Nifty Bank. So Bank Nifty now this time it went slightly below the 50 moving average, but there also, if you look at it on a close basis, see, you should not look exactly this day on this day close. Okay, now this day, particular day's close, we should not get this makes a pivot. We should not get another close below this. That's the way, that's the way you should understand the 50-day moving average. Not that exactly, you go and sell immediately on this. So if that be the case, then in that case we should see this particular thing holding, that is 35,150 approximately, on a close basis. We should expect something like a 35,150 to hold for some time, and assuming even if drops a little bit, I think that particular day will become a low and it will start to rally. So anywhere this one, so the trend line, if you put it here, so on a low to low basis, so we should have 34,890, 34,900 to hold in the present case. So we should have 34,800, 34,900 to hold. Now there is still a rally which it happened today also. There was some rally back. So if at all there is going to be a fall, we should have this particular I think 34,850. So we should hold to 34,850 levels. So 34,850, 34,900 is a point it will hold. So which gives a fair feeling that we should now look towards it is 36,169. So we should look at what is the time value that we are going to give on a weekly option. So let us look at the round options of 35,500 and 35,000. Now Bank Nifty on the upside, if it goes, the first resistance will come closer to 36,455. Now where did it come now? So it came closer to that, but it has not gone. So maybe this particular close 36,368 it came, and this time it came and probably went very closer to that, and as some stammering around that. So if it still goes up, then I think we will have this particular close, which is 36,450. So there will be multiple clustered resistance coming between 36,400 to 36,450. So we can expect some fall from there, And if that be the case, we have seen Bank Nifty this time also going down. See, in this case, it went down from 35,810 to 33,908. So this is around 2,000 points, right? 1,900, 2,000 points. So if it goes to 36,450 or so, then probably it did not come to 34,450, 34,850, 860 levels is still something which cannot be ruled out. So right now, Bank Nifty, either you can wait for some correction because it has already gone up and it has crossed the previous high. And the strength in Bank Nifty doesn't look the same like the strength in Nifty, because Nifty has crossed multiple highs. But Bank Nifty, if you see, the high which was made in February is still not broken. Which means definitely on a relative strength basis, Nifty is much better than Bank Nifty. Bank Nifty, the rally is happening, but it is still quite feeble compared to Nifty. So if you want to do whether Nifty or Bank Nifty, the capital that you should invest based on the chart is more on Nifty rather than on Bank Nifty. So Bank Nifty, you please wait for correction, and if it comes, you can do that. But in case if you want to take a call right now, So how you should take a call instead of doing in the futures, because futures if you invest, it will come to 1.7 right now. I think it will come to 1.7 lakhs, right? It will come to 1.7 lakhs for a quantity of 25 right now, right? So let's look at what we can, how we can minimize that investment. Now, Bank Nifty normally, if Nifty rallies by 12%, Bank Nifty generally can be higher. It can, because of the volatility, it can go by 18% or so, but not necessarily. But normally the Bank Nifty volatility is more than the Nifty. So on an average, it should give a higher return for the risk that we take. Okay. So let's look at where Bank Nifty, what strike we can take. So we are only looking at the weekly option, and right now the at the money option is closer to 36,200. Now 35,500, it comes to something like 63 rupees, which is acceptable, because 63 rupees, it comes at 0.2%, assuming we are doing at something like 0.2%. So 0.2% still not acceptable. 0.2% per week comes to 0.8% per month, which robs off 9.6% per year. So I don't think we should do that. We should go for something like this. Okay, 35,000. I would still go for 35,000 rather than anything, because 35,000 you're paying only something like a 25 rupees. 25 rupees you're paying. So that is much more acceptable rather than 35,500. Suppose if you're going 35,500, then you should try to go and for selling some call on the upside, which could be 37,100, 37,200 levels. Because right now on a normal scale, now 36,200, 300 levels, I think the general thing is that within this particular week, it can go by another 37,000 or so. It can easily go. It has the potential to go. So I think we can just sell something like a 37,200 call in order to get off some premium if you're doing at say 35,500. But the plain thing is that you better go for 35,000 call. That's a very easiest thing to do. And 35,000 call, if you do it right now, it's going to be like 25 rupees. So 35,000 call, it is 1,175, which is the same into 25. Okay. Now 1175 into 25. This is say 29,375. That's the amount that you are going to have, and we are going to lose something like 25 rupees on the time value. It is acceptable because 25 rupees on time value for the entire month it is going to be 100 rupees, which comes to something like 0.0028. So for the entire year, you are just going to absorb some 3.4% or so. It's okay. This is an affordable thing, and we should look at this particular thing as far as Bank Nifty is concerned. So I think you just need only an investment which is 29,025. So overall, what we are saying is, if you have an investment which is 25, if there is a fall, you put in a little more investment. See, sometimes you gain, sometimes you because generally you have been gaining, right? So what happens is that in one particular rally, see, let us look at this. Now you wait for some correction, then you let us say the market goes up, and you are able to take 1,000 points profit in Nifty. So let us say you invested somewhere around 35,000. I am just giving, these are all hypothetical, but you should work out this particular plan. Let us say you invested 25,000 rupees and you have been patient enough because Bank Nifty and all rallying by 1,000 points over a period of 1 month and all is definitely possible, right? So that 1 month you kept on rolling over the options. So into 25, so 25,000 you got clean, you got, right? After that, this capital has gone back. Okay, so this becomes your capital. So this becomes only a cushion in case if it drops down, you're putting. So somewhere you're getting that 1,000 rupees point profit somewhere. Then in that case, your capital is back with you. your capital is back with you, right? So you are in a position to ensure that at some point of the time, because overall, see, as far as stocks is concerned, it's a very difficult situation to say how much it will fall, when it will fall, what stock it will fall. So you need to be technically correct. But as far as index is concerned, the question there is that you don't need to be brilliant as far as identifying the levels where you have to go and buy and sell, because you generally have a belief that it at some point of the time it will keep scaling up. So the only intelligence that you need to apply is how do you minimize your investment to enhance the return. If that be the case, then in that case you should always look at something like a option which is deep in the money. That is what we are trying to say. Now the spread comes when you are looking at some higher volatility. If there is a higher volatility, you are able to realize in the spread itself what we showed you deep in the money. The same I told you, 16,300 call in the case of Nifty. You buy a 16,300 call, but there you are paying something like a 27, 28 rupees. So I want to minimize this 27, 28 rupees maybe to 10 rupees, means I need to sell something which is 17 rupees or so on the call side. But I'm not getting even 16,600, 16,700 is around 16, 17 rupees, right? So we are not getting that. So there is no point in doing which is a call which is quite close by 100 points or so. Let us look at the same again now. Nifty. See, Nifty call 16,000 is 150 less than 200 points away, 170, 160 points, around 16 rupees. So if I have to do a 16,300 and then 16,700, I will be able to minimize and make it 10, 11 rupees, which is something like the 16,500. But the only worry there is that the 16,700 is a potential breakup point. So that means sometimes when the rally continues to happen, like last 1 week, 2 weeks thing which has happened, then you just keep losing on the upside. So in that particular case, you need to be really smart to push this on the higher side as and when you get it, to push this on the higher side as and when you get it. But then rolling over cost and then your ability to do that rollover and all, it's not going to be that easy. So it's going to be quite expensive for you to do that. So it is better to avoid such things by doing this. So that is how you frame all your strategies on Nifty and Bank Nifty. Consider that it is not the case of particularly Nifty, more than Bank Nifty, particularly Nifty. I think the most important thing is how do you rationalize your investment rather than looking at the technical level to buy and sell, because if you believe that the market generally goes up, of course it is heated up now. So what you should do is that in that case you wait for some fall and then start your investment, maybe 400 points of fall from the higher level. If it is 16,500, 16,600, maybe 16,200, 16,150 could be a point or slightly lower. That place can be the place where probably you can 15,950, 16,000. There could be some fall at some stage. From there you start looking towards an investment so that you can build it. Right now it's quite hot. So in this case probably you may say I may need to trade a little bit. Okay. Now being higher level you should be a little bit careful to trade. Okay. But generally even in this place, since the general trend is on the higher side, you don't go for short positions. You generally go for a long position. Even on intraday basis, today morning it jumped. Okay. So you pick it up on a rally. So probably these days the corrections in intraday in the last couple of days or so, even the corrections in intraday is not 40, 50 points. 50 points itself you are not getting, 35, 36 points you are getting. Okay. So wait for some small correction and then go on board as far as intraday. So do some sort of trade which will not have much of a risk at this point of time. But if it falls down, then in that case you can look for increasing the investment. Whatever I told you as far as the Nifty and Bank Nifty applies equally for stocks. Let us say you want to invest in, let us say, but there question is you don't have a weekly option, so you have to only look at the monthly option. So let us say you have one of the best whatever stocks that has come down and looks like going up. In that particular stock you want to make an investment. Let us say you're looking at ICICI. Just for illustration I'm just giving you. Let us look at ICICI chart. So I say generally as held on to the 50-day moving average, and now we expect that probably somewhere around 685 where 20, and then 659, 660 where it is coming should be decent levels of support. So you may wait for some fall around that particular level before you look towards some sort of an investment there. Now let's look at ICICI. Now if you want to invest right now, this is a 705. So let us look at the monthly thing, which is now this particular month. Okay, so we'll look at ICICI. So ICICI now the 700 option, this is a monthly option, and this is going at 1%, but that is only today is 13, right? So there are only 2 weeks to expiry. So for 2 weeks you have to pay 1%, means it comes to 2% per month, which is 24%. So I don't think we should look at this. So 700 we should discard. That's how you should calculate. Okay. Now let us look at 680 call option. Now 680 call option, if you go for it, it is 29 rupees, right? 29 rupees. Now the amount that you are paying is 2 rupees 85 paise for 2 weeks. Okay. So probably generally that comes to be something like a 0.4% or so, 0.4%. So 0.8% is 9.6%. So normally ICICI and all, if it rallies, it could be 30% or so. Okay, so I think slightly acceptable point of it, but still you want to minimize something like that, then probably we should even go at something like a 650 or so. Okay, where probably we are looking towards nil, almost probably a case where we don't need to pay much of an time value. If that be the case, then we go for 650. Assuming we do that, then the minimum lot size I think is 1375. So 1375 into 58, okay. $1,375 into 58. So if you want something like a futures, it comes to 80,000 rupees. This is much lower compared to the normal investment that you need to go, because 1375 today the value as far as there is something like 9.6 lakhs or so, right? So 9.6 lakhs. So there the investment that will be called will be very high, 2,50,000 or 3 lakhs. That I'm not sure about it. So here you are going to get much lower investment thing. Otherwise, no, you can look at the spread option. You can even look at the lower, if you want to have a lower investment, you can go for 680. 680 is going to come at only 29 rupees. So 29 rupees, and the only thing you are paying 2 rupees 85 paise. So for that, if you want to nullify that, then in that case you can look at something like a sell a 760 call option or so for 1 rupee 15 paise. So almost this will nullify that amount of thing. So there, then in the investment that will be called is only 29 rupees plus, but they will call for 3% I think on the exposure margin, which comes to around 28,000, 30,000 rupees will be that thing. And for this you have to pay only 29 rupees. So 29 into 1,375 will be approximately 40,000 plus 3% on that, so 67, 70,000 rupees. So approximately it will be always both the investment will be the same, almost the investment will be the same, right? But only thing is advantage, if it's not slipping a little bit above 680, then you save more compared to normally going for a 650 option. So that's the trade-off you have. So what we are saying is that for a much lower investment of 1/3 or 1/4 of the normal futures, you can look at deep in the money option, even in the case of ICICI. Okay, so either you can look at 680 option or you can look at 650 option also in order to. So what is more important is you have to look, please look at deep in the money option instead of futures, which will save you the capital. One. Second thing, which deep in the money you should take, you should always look at, as far as Nifty is concerned, on a weekly basis, don't give more than 10 rupees. That is the that is the put. That is whichever deep in the money call option you're taking, corresponding to that strike, whatever strike is, for that the option premium should be only 10 rupees as far as Nifty is concerned. The case of Bank Nifty, it should be only 25 rupees. Okay, in the case of ICICI and all, whatever value that you give, that if you take it on a yearly basis, that that should not take you around more than 7 to 8%. It should be like that. That's how you calculate and use the deep in the money option for doing trades. So now time is 7:50, so you can ask your questions. Thank you very much. See, trend is there are you can look at higher highs, higher lows as one way of how to identify a trend, because the participant has asked how to check the trend. Checking the trend is generally going by higher tops and higher bottoms. So see, in the case of ICICI, we are also getting higher tops, right? So we're getting higher bottom, higher top, so higher bottom. So we are getting successively this one. So now again, there was some sort of this one. There was a lower bottom, lower top. So if this is going to be broken, which has been broken approximately today, so that means we are getting a higher tops right now. So if we get a higher bottom again, then we are going to go for a long. So since generally, if it is about 20 and 50, then no, don't take any short trades. Generally look towards only long trades. That's whatever pattern that you get. Please go only for long trades. So that is how. So about 20 and 50, you look towards the long trades, and below 20 and 50, you look for short trades, generally speaking. So that's how you do the trend. Okay. Reliance trend is somebody has asked, what is the Reliance trend? Reliance, I would say, it has started picking up, and the big trend is sideways, but it has now started to. See, Reliance, it has gone up. Say today it has broken. It has now stayed above this 20 and 50 moving average, right? So it came down below 20 and started to move up. So on this particular day, so see, it went up, then came down to 20-day moving average, right? From there, it started to pick up again. So this is the day when I would have gone for a long. That is about 2089. So the trend is now about 2089. It is on the long side, and it has now started to pick up. So Reliance is looking good. Probably it may go up to 2275, because number of times it has stagnated close to 2275. So 2275 is a level where you need to be careful about it. Normally, if you get more than one close below the 20 moving average, you generally think that the trend on the shorter time has turned on the downside. And if it is more than one day on the downside, as far as 50-day moving average is concerned, then you think that the trend has gone to the other side. So generally, that's how you look at it. But normally, if you look at Reliance also, overall it looks quite choppy. It looks very choppy right now, and stocks are generally like that. Sometimes it will go in a big trend, and sometimes it will go in a choppy note. So right now, overall looks to be choppy, which is more between this 2040, 2020 and 2275. That looks to be the overall trend. But right now, the short-term trend is swung on the upside for a move towards 2250. Tata Steel trend is up. The Tata Steel trend is on the upside. Sorry. Tata Steel there's no doubt about this Tata Steel right now. Right, so Tata Steel, it's a clear uptrend. So because it's above the 20 and 50, that's the easiest way we can understand this trade. And Right now, even if there is a fall, I think probably it will go closer to 1240, 1243. So generally, the medium trend, generally speaking, is a pivot close below 50. A pivot close below 50 is going to be the most dangerous. So when it came very closer to this 50, so normally 20 itself, it can take support and go above this. So it did not come much below this. But if you see this day it came, right. So when it came down to 50 moving average, and when it started to rise from there, you should be long. So Tata Steel, after the last correction, it is an up move from 1109. So if at all there is to be deeper correction, we need to see some correction coming up to this and then start to move up. Then that will become a clause where go for investment. So right now it looks to be a very good place for carrying on your trading position. And investment position, I think some stage it may come down, and that point will be the better point to start your investment. So thanks for your participation, and whenever I enter Bank Nifty, immediately market, I'm always at a loss. So what you should do is what I told you right now, that stop losses depends on what exactly the places that you elect a stop loss. Okay, now if you put a very because in the intraday there can be many points of swing that can come. So let us say the same NSE Bank. See, today itself, let us say we'll put a 15-minute chart. See, in the 15-minute chart, you can say it came down closer to the 50 moving average and then started to rally, right? So you can hold yourself a little bit patiently up to a 50 moving average. Because if you see here also, in many places in the last 15 minutes chart, see it went up to 15 and then came down, right? Here also it went up and came down. Now this is a place, now it went above 50 and then made a pivot point and then came down. So now from now onwards, if you take a long side of this market, okay, long side, you can definitely be looking towards profit. Now what you should do is that even when it comes to 50, that is, let us say it went up and then came down to 50, right? So this is the place, the most appropriate place was this, because if you get another close below this, then we would have gone. I think the chart is okay, it's gone. So as I told you, first of all you look at the Bank Nifty coming closer. Bank Nifty 15 minutes chart you take. Wait for a drop which is closer to the 50 moving average in a 15 minute chart. Generally it comes like that. At that place, when it starts to go up, that particular bar, when it starts to move up above that particular bar, okay, go for a long with that low as a stop loss. So generally you will be able to get Bank Nifty within say 50 to 60 point stop loss. You will be able to get if you do like this. But more appropriately, as I told you, if you feel that Nifty and Bank Nifty is going to go up, okay, don't keep putting on stop losses. So you have a belief that the market generally will go up. So as I told you, just take deep in the money option and just leave it. At some stage, the strike gold, then you'll see. Okay, thank you. So thanks for your questions. So looking forward for the next webinar. Okay, thank you.